Welcome back. Now, before we take a look at the day's business news, let's first take a look at the stock indices across the GCC. And in our top business story, the Dubai Gold and Commodities Exchange recorded a 55% rise in trading for the month of July compared with the same month last year, with a total trade value of $44.68 billion US dollars. The DGCX's currency segment recorded a year-on-year growth of 61%, with just under 1.5 million contracts traded. Currency volumes were primarily driven by the Indian rupee futures, with the contract recording its highest ever monthly volume, trading just under 1.3 million contracts in July this year, a 40% growth over the same period last year. Total year-to-date volumes rose by 91%, with the exchange having traded just over 9.2 million contracts in 2013. DGCX's precious metal segment also performed well in July, with volumes in gold futures rising 16% from June to 34,414 contracts. Silver futures also grew 150% from the previous month, and another notable performance in July was that of DGCX WTI crude oil futures, which saw an 86% month-on-month rise and a 51% year-on-year increase in July. Emirates and Qantas have enhanced their joint network, and bookings are now open for their new schedule between New Zealand and Australia. According to a statement, Emirates will continue to operate 28 flights a week to New Zealand, with daily flights to Auckland from Sydney, Melbourne and Brisbane, and the daily flight between Sydney and Christchurch. From the 1st of October, all Emirates flights to Auckland will be operated by an Airbus A380. Qantas currently operates double daily A380 services from Dubai to Australia, with connections to over 100 flights per week to New Zealand. Tim Clark, the president of Emirates Airlines, said that through the partnership, the Emirates network has now been opened up to include Queenstown and Wellington in New Zealand, in addition to the 55 destinations in Australia already on offer to their customers. Abu Dhabi's duty-free has announced a rise of 17.4% in sales revenues for the first half of the year, reaching 437.6 million dirhams. According to a statement, the revenues rose by over 108 million dirhams, and it was largely attributed to the growth in spend per passenger, which rose from 53.96 dirhams in 2012 to 55.10 in 2013. It added that the revenue growth for H1 exceeded the 12.6% growth in passenger traffic that Abu Dhabi International Airport registered in the same period. The UAE's industrial sector contributed around 14% to the country's non-oil GDP over the past decade. That's according to the latest study. The report by Dubai Chamber of Commerce and Industry shows that Dubai targeted services and light industries, while Abu Dhabi targeted heavier manufacturing industries due to the availability of cheap energy. The study added that the UAE's manufacturing sector has driven the majority of non-oil trade. Additionally, the UAE manufactured exports increased to 59.2 billion dirhams in 2012, registering an annual growth rate of around 18%. According to the UAE Ministry of Economy's latest figures, there were 5,201 industrial establishments with a total employment of almost 400,000 workers.